Okay, it is Monday afternoon, April the 21st, Easter Monday, where Europe and UK have been on holiday. Uh, Looking at our F1 screen, the market is pointed higher. We've got ourselves a higher low and a higher high, and it means it's okay that we buy into breaks to see if we can extend the range in the overnight session or tomorrow. We've got a lot of resistance in this 65, 67 area right in here. And if that holds, that sets up a trading range where it won't be, you can make a pretty strong case that we're going to retest the 1810 area. So I can buy weakness to see if we can extend the range up, but if we don't take out this, say 65 to 70 area, I can get short too, just based on the structure. Pretty tough trading today. Our ideas, we were able to get that, but you're really dealing with, a five-handle range. Not much when the trade's set up. Not much to work on past that. Must be Monday morning with a couple of major parts or major players, parts of the world on holiday, if you know what I mean. Okay, this is earnings week for the stock market. Making earnings per share, like we talked about this morning, is pretty easy to do for these major corporations. Their reserve requirements for whatever they're required to reserve against. Goodwill write-ups, write-downs allow these people to manipulate the numbers to hit their earnings per share forecast. And it's the revenues, it's the top line that has everybody bothered right now. And some major corporations are reporting problems with their top line. Right here's this low volume area in the 68, 69 area. Here was our attractor at 65, which we were pretty comfortable we were going to get to. Definitely dealing with a P today and yesterday, Thursday and Friday. So everything was pointed up today. We came in wanting to buy 55s, 57s. Wanting to sell 64, 65, and we're still in that same position. So if the market were to close right here, right now, we'd be selling 65 plus or minus and 70 plus or minus. I do think structure, because we've crossed the entire trading range, I think that the short for a 2 to 3 day trade offers us more potential than a long. I can't see us taking out 1900 based on the news that we have today and with what's going on between the Ukraine and Russia. But once again, high-frequency trading programs, you don't need much more than trades on upticks. Probably the most interesting article today was on Zero Hedge about why the demise of high-frequency trading was coming. We've had all these articles written about how bad high-frequency trading is because they screw the investor. But you forget back in the old days that the spread between the bid and the offer on the NYSE was 12.5, and it was 25 cents to 50 cents on the NASDAQ. And so all these bad articles that are being written in the financial presses are written about spreads of 1 to maybe 2 cents. I mean, it doesn't make sense, except for the fact that Goldman, Bank of America, Citi, and the rest of them are tired of these high-frequency trading programs taking the game away from them. So if the big five move in against this and they want to bring it back in-house, not to their subsidiaries, high-frequency trading will change its color. On the buy side, I still think, we're looking at 55, 57 for buy one, and then buy two at 50, 52. If the market is stronger than I think it is, 60 is going to hold, and we'll trade up. So that's what I have for the E-mini, basically selling the 65 area to 70 area. And buying 55, 57, 50, 52. Okay, tomorrow's the 2-year auction. And it's usually a good one. I thought we had one more chance maybe for a down day, but we wanted to buy into weakness this morning with the idea that the 2-year auction would hold the market. And the note is lower today. The selling continued from Friday. We stopped pretty much at resistance. And so 28 to the buck is resistance, and I think we got pretty good support at 12 to 16. The knob spread came in. We're now at 10 points, 10 handles even. And when we look at the F1 screen right here, you can see that we are a lower high and a lower low, but we've lost some momentum too. So we can sell into strength, but if we don't extend the range right here, then we want to trade from the long side. And the reason we want to trade from the long side is the 2-year auction. Taking a look at the F2, so the F1 screen says down. The F2 screen, we're looking at a P. Perhaps a move out of the middle and H period lower. And it's going to be the same as it was today. Basically, this 28 area, selling failure to take out 28 to the buck will be sell. And I do like the buy side, so I think buying 17s to 21s because of the 2-year auction will be our buy for the overnight session. And then 9 to 13 if it happens to break that. But I do think we're going to be looking for a place to get long tomorrow as opposed to short. Looking at the ZB, and when you've learned how to trade, perfected the technique, take it to the 30-year. It's a little more than twice as volatile. It's 31.25 a tick. It moves directionally in your favor. It moves. And that bigger tick makes it, people tend to stay with their trades a little bit longer because they got more at stake. I remember the easiest trading in the E-mini when it was $500 a full point. I mean, there was no way you could not make $500 on your trades, nor lose it when you put them on. I mean, it was just the way that it was, and if you were halfway good, you made it. Down at 1250, it allows so many head fakes and so many games to be played. That spread between the bid and the offer opens up all sorts of possibility for those that have the capital to manipulate markets. So right here we are. We got a pretty clean break at 134, 134.06. So selling failure to take out 34. 34.04 I think is the trade in this one. And then on the buy side, I like the 17 to 21. And then the 9 to 13. So I think the 2-year auction is going to hold the market in check. And if the E-mini is going to the moon, we'll get our fills on the buy side. And if the E-mini does not break out this afternoon, then we may have to pay up. Okay, gold held in there today, basically idling, moving sideways, awaiting probably some resolution. Ukraine and Russia, I don't think it's coming quickly. I mean, if the United States really wants to set off a hornet's nest, they're going to dip into Putin's private stash, which reputedly is held in Switzerland. Now, when we start making hints about banking this, banking that, remember at Cyprus and all these other places how the big money got out early. If Putin thinks his money is going to be taken from Switzerland, it's going to move to the Caymans, to Luxembourg, to Abu Dhabi. I mean, it's going someplace. China. They will not allow that to happen. So when you look at, we've rejected prices above 90. So this 92, 95 will be sell 1. And then sell 2 will be 98 to 1300. On the buy side, 82 to 85, buy 1. And then 75, 77 for buy 2. I think gold's going to move sideways with a seller at 13 and a buyer against 80 as it stands right now. Okay, crude is stuck between 103 and 104 right now. We have summer seasonals starting to kick in. We also have the discontent between Russia and the Ukraine and how that's going to resolve. Both sides. Russia's saying, hey, it's not us, it's ethnic Russians who just happen to live in the Ukraine. And the Ukraine is saying, you know, get your people out. My guess is that the Russian special forces, dressed up as civvies, are behind the trouble. And they're going to stay behind the trouble until Putin calls them off. And if anybody in the Ukraine threatens to blow up those pipelines, Russia will move. I mean, they cannot allow those pipelines to be blown up. And as much as Russia will bluster and make noise against Germany and the rest of Europe, he needs the money. So he may shake things up and interrupt supply for a day or two, but not much more than that because dictators need the money. And the euro, I think the long-term direction is down. Now, the longer-term structural plays, the longest-term, easiest fundamental to see and is selling the euro, in my opinion, because the European Central Bank has said that they want the euro currency lower so they can export people outside the European Union. There's definitely a buyer in the 137.75 to 138 area, and there's definitely a seller above 138.50 right now. And it's hanging in better than anybody thinks it should. So you've got when the yen-euro traders decide to reverse their positions, the yen gets clobbered, the euro rallies. When the dollar-euro currency traders decide to reverse their positions, the euro tends to rally and the dollar gets popped. Everybody knows the dollar is headed lower over time to the tune of whatever our deficit is per year. Our central bank isn't going to change that. They don't have any other way. I mean, it's other than devaluation of the currency. And the mathematical, see, we're at 94, last rotate up, so we'll make it 10 to 20, sell 1, and then 40 to 50, sell 2. And I'm going to go turn the recording off right now and be right back.